Good afternoon, traders. This is Trader Tim from over at eminimind.com doing a Monday market analysis video. Today is November 26, 2018, and as we head into the last 4 or so weeks of the year, I wanted to talk a little bit about where I think the market might be headed. Not something I usually do in terms of kind of sharing my directional thoughts. I try to keep it a little bit more objective, talking about the various levels and lines in the sand that we can use, which I'll do as well. I hope everyone had those of you in the U.S. had a good Thanksgiving holiday, and everyone, I hope that you had a little bit of time to regroup and kind of refresh yourself on Thursday, Friday last week, as well as the weekend. As the markets were closed, and Friday was the half day. So let's look at where we're at here on the E-mini S&P. We've got a 50% retracement drawn, which is the next one in the trend. We traded very cleanly up here. The 50% last week moved down to the target, and then now we're bouncing back to the next 50. A little bit messy down here. Some of the topping tails and then Friday's candles sort of irrelevant. And then today with a gap up, we've got a little bit more room to move above us to 2687s. And so that's about 10 points. Now we are still holding in the bigger short above us. And so that gives some weight to this 2687 short. However, the market has had some good opportunities to break lower and really accelerate, and we haven't really done that. We've talked about how the VIX for a number of weeks has not been as strong, meaning volatility has not been increasing at the same rate that the S&P, the broader market, has been decreasing. And that's typically a sign that, there's not really as much weakness in the markets as maybe on the surface. If we go back, I know a couple of weeks ago we were talking about this. If we go back to January, we can see a very similar pattern. We had the bigger sell-off, a bounce, actually two bounces before a, pretty deep correction that did not break the initial low. And that's exactly what we have over here. A big push down and then one bounce, and we've made a pullback that has not broken this initial corrections low. So we've had plenty of opportunities to do that, as intraday the market has broken lows last week, and those lows have been bought. So I'm not very bearish at this point. We've from a technical perspective, I'm sort of looking at the 2775 as this short level that's been pretty messy. We haven't traded right to it. We've gone really just a few ticks beyond the 61.8 each of these two times here as we've rolled over. And so with the end of the year in sight, and the Christmas holiday and just holidays in general at the end of the year, we tend to see a lift in the markets, and the economic numbers coming out are all holding stable at worst, and so things are not as bad as some of the media outlets may be trying to push them. And so for that reason, I don't think there's any need to really reason to panic. If we do break lows, break this what I would call a major swing low down here, down at 26.0, we'll just call it 2600s. I would look for a big bottoming tail to form on that day that breaks. I would expect that we, come down and then that low is bought for a couple of reasons. One, if it's a big enough sell-off, we may move down. Let's say we break 2600 and it's a Dow 5600 down down day. Well, even if it's a Dow down 1000 day, that may take us down to this target of 2522s on the ES, and that alone, moving down in, say, the first couple hours of the day, sometimes that alone can be enough to uh, kind of flush out any of the um, sellers that are trying to push the market down and exhaust all those sellers. And then, there's longer term buyers that see it as a great opportunity. And it's when those longer term buyers step in that the markets really start to take off in a sustainable direction. So whether we actually break lows or whether we don't, it's my opinion that we should see some lift into the end of the year. And, a lot of that is based on, just some of my observations and sort of intuition that I see intraday watching the markets and the way that especially the ES is moving. Um, and, I'm always under the assumption that things can change at any time. But at this point, being so close to the end of the year, that's sort of my bias going into these next couple of weeks. And it doesn't really allow me to act in a certain way when I'm day trading. Whether my bias is up or down, I'm going to day trade based on the direction that the very short term momentum is going. So we could be in an uptrend in these next couple weeks, and I might be taking shorts intraday if that's where the short-term momentum is going. So um, you can have a long-term direction and a different short-term direction, and that's completely okay. So watch out for maybe a little bit of a reaction here at 26.87s. When I say reaction, I just mean a sell-off, a temporary pullback. And then if the key swing highs and swing lows to watch for are a break of this swing low from last week, a low from Wednesday, 26.32.75, and then the 26.03s is the major swing low. Then up here we have a 27.48.75, and that's important because the weekly chart, that is the high, of last week right here. And anytime we break a high or low of a day, anytime we break a high or low of a week, that has more weight. That level has more weight than, just another intraday price break. So watching those 2 points especially, 26.27s as the low, and then the 27.34.75 as the high. And, a little bit of a wedge forming. If we come back to January, we saw the same thing where the markets are kind of getting tighter, lower highs as well as higher lows before the uptrend resumed. And that's kind of what we're getting here, lower highs and then a little bit of a higher low. And so there's more room for us to move in that same trend as well. But in the meantime, the first part of that leg may be a move back up to 27.75. So tomorrow morning we'll do answering more questions and walking through the E-mini S&P and some of the other markets live. You can check that out. It's over at eminimind.com/VIP. And if you have any specific questions, as always, shoot me an email, tim@eminimind.com. Thanks everyone and have a great week of trading.